Good morning from Chicago traders. It's 8 a.m. right here in Chicago on Thursday, the 4th of November, 2021. This is episode number 2109. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Very quickly, we're going to bounce right into the conversion trading pre-market summary sheet. The overall posture is mixed. You see it's yellow there. It's mixed overall. I've noticed that we've had mixed overnight posture pretty much every day for the last for this week. It seems to be forming a base overnight and then taking off during the day, which is the opposite of what we've seen for the last 4 or 5 years. The main risk, the main focus and event risk for today, the U.S. unemployment and non-farm payrolls are coming out tomorrow. Market, that's the second most important release. So we got the FOMC out of the way, and the market received from Jerome Powell, J. Powell, what they wanted: a taper of 15 billion and putting off any interest rate hikes and so on. So that's what we're looking at here this morning. The initial jobless claims came in slightly better than expected. They came in at 269,000 for last week versus 275,000. The balance trade came in slightly worse, was expected at $80.5 billion deficit, came in at 80.9 billion. The BOE rate decision was released also this morning at 8 a.m. Eastern, and as expected, it's pretty much in line. So more voted unchanged versus expected. So all in all, just everything is smooth. What's remaining for today? And by the way, major earnings season. The last big earnings are, I think, Disney and Berkshire Hathaway, I think. But the really major stuff comes to an end this tomorrow, and it pretty much wraps up the Q3, the major pieces of the Q3 earnings season. You'll continue to get earnings, but generally nothing major. So so that's going into effect. Today, not much on the calendar. Very, very light. Pre-market, we had Amerisource, Burgent and Cigna Health, Telefonica, Aero, Duke, Viacom, Moderna, Credit Suisse, Nintendo, and others. After the market, we're expecting AIG, Occidental Petroleum, Square, Uber, Commonwealth Edison, Carvana. That's what's on deck. Looking at right now, crude has popped higher. Crude pushed below the 80 handle into the 79 handle, and has popped a little bit higher this morning on the open. It just turned and pushed into the monthly view app. I'll show you that in a minute. So crude is up where it was down 300 basis points plus yesterday. It's up 250 basis points today. Crude back into 82, 83. Gold finally getting a pop. Gold didn't really make a move, not that strong a move, or as strong as expected yesterday. We're looking for gold to really respond to what the Fed was talking about, and it was it really didn't do so. So hang on, something's up with one of my charts here. I'm going to fix it. There we go. There we go. Now we're talking. Very cool. So gold yesterday on the FOMC did pop higher, but really it didn't even take out the morning's open. Very interesting there. So Let's move on to the S&P. The S&P has traded 145,000 contracts, rounded up. The overnight inventory is 89% long. Essentially, the market opened, pushed higher, and has held above the prior settle for almost the entire session. 89% of the volume traded above the prior settlement. The range is pretty low, 11.75 points. The point of control is at 46.58, 46.58, and really it's still balancing at new all-time highs. So we made new all-time highs at 46.62.50, the overnight high, in the extended trading hours, and that's what we're coming into. We're basically coming into a market that may or may not be out of range versus yesterday. Remember, yesterday's high was 46.57 even in the ES. So we're teetering on the edge of being in range or in a gap. So in either case, the internal gap back to settlement 46.52 quarter is quite small. It's only 6 points, one rotation really at current statistics. So that's where that stands. Looking at what was expected yesterday, this was yesterday's Trader Bite, episode 2108. I didn't draw a map on here or any scenarios on here, but I basically explained that it is likely to chop around because we are coming into balance. We're coming into balance on the session. We're coming from balance to overnight balance, and it's looking pretty tight. The constraints are 26, 27 down to 12. That's the anticipated range. If we start to move around, but then I talked about the fact that I'm seeing 30 as the next key price up, and then from there, really we're clean up till 50. So that's what was expected. Again, you can always watch these videos. You can always go back and see these on my YouTube channel with the English captions, if you like. Looking at what did happen yesterday, this was a complete and utter. I'll keep this PG. This trade yesterday was completely terrible. This basically was the first few hours until FOMC. The FOMC came out at 1 o'clock my time, 1 o'clock Chicago time, which is right here. And it really, it was nice to see an explosion of the range. But before that, oh man, it really couldn't do much. We had a profile that had triple TPO high, double TPO low, and it's been really awful. It was very awful. But on the break, on the news, it popped to where? 30. Remember, the next level up was 30, and then I drew a squiggle in yesterday's thing into 50 being the next key target. I have a measured move high at 54.75, and that becomes the extended target beyond the mid-century. So we pull to 30.50, nice fill there at 30.50, comes all the way back, pushes through the IB, pushes through the mid, and pushes right back into the full session VWAP and RTH VWAP before it tries again. This looks like it's faltering here, and then it finally catches a bid and starts to take off. In my opinion, the opportunity absolutely and positively did not exist before the FOMC release. There was just nothing there to do. We had a very tight opening swing. That's a first. That's our first indication of what the market has in store. A 3-point opening swing is something that we typically saw in early 2019 and before, not something that is during or post pandemic. We've had opening swings of 16, 17 points during the pandemic. I don't expect that, but recently the opening swing has been about 6 to 9 points, at least one rotation, and we didn't have that yesterday at all. So immediately go into caution. I did try to participate in here, and as one would expect, just losers anticipating consolidation, anticipating the break of the double IB high, double IB low, and just it did not happen. I mean, this is just a setup, but really, I would call it almost a FOMO error. Um, a FOMO error on my part, really, on those initial transactions. So that's yesterday. Yesterday we did get get price pushing, and we got delta pushing as well. Delta was very positive yesterday, and the tape was nice and blue. Um, Coming into this current session, here it is. We open back up. We open back up into yesterday's last hour, which I treat separately, really mainly ignore. And then once we opened in today's session yesterday at 6 p.m. Eastern, we dipped down and we immediately push to 46.60.50. There was some size there on the offer a little bit that got taken, and then it falls right back towards settlement, and it's just been grinding. I expect this grind here that you see here, I expect this to continue into today. Again, the market does what it does. I'm not predicting what the market will do, but this is how I'm seeing based on a best guess. This is what I'm seeing based on the current action. We are basically trading. We've got the VWAP mid at 57. We've got the point of control at 59. We're trading at 60, and it's slowly grinding up. And we've got a double top at the high, a double TPO high here in the overnight session, making that high relatively weak. I'm seeing a taper in volume, but still, we wouldn't expect if this price was too expensive, we expect the market to pull back, consolidate, and move the other way. And it hasn't done that. After putting in this high, it has not tested this low at 50.75, 51. It hasn't done so. So this is looking like it is likely to get the overnight stat by taking out the 62.50 on the open, but we'll see what happens. So that's where we are. Looking at the big picture overview on Edge Pro X, I've changed this chart a little bit. You have your ES, YM, NQ, RTY, and I put the energies down here, nat gas and crude, and the middle are fundamental products or macro products, gold, silver, the bonds, and the 10-year note. And you can see that crude here has been getting some good separation. I talked about this yesterday. Good separation on its monthly VWAP, and then this morning it actually touched that monthly VWAP almost to the tick around 82.60. It's pushing through. Now it's actually breaking out to the upside, but the point of control on crude is chasing price, so it may trap buyers at some point today, is my opinion. As far as the indices, pretty decent separation here. The industrials have not been as strong as the blue chips in the ES, but techs are leading. The techs are the Nasdaq opened in a gap and basically held steady for the entire session. It crossed over 16,000 yesterday, and it pushed 16,216 on the high this morning. The techs are very, very strong. Also, we saw the Russell, the small caps, really rallying from yesterday's open. So while the ES and everything else was sideways, money was coming into the small caps, which was interesting. It was it's just looked like a much better trade than what I was looking at. I don't generally trade the Russell I haven't traded the Russell in a long time, but so that's where that stands. The bonds have popped a little bit higher back. Remember yesterday they were moving away. They're popping right back into their monthly VWAP, and the notes have been just crisscrossing and really just imbalance. I mean, you have a high for the month, you have a low for the month, and we've been stuck in it ever since. So same with the treasuries. So with the FOMC behind us, we expect that these things will move directionally, but they did not. So that's the bigger picture. Let's take a look at what's expected for today so you can all move on and prepare yourselves for the session. All right, so some interesting price structures underneath. New all-time highs, so a pretty arid, I have to say, arid kind of landscape ahead of us into new all-time highs. Again, we're looking at the overnight session. We're sitting at on the point of control here, around the point of control as we come in. We did not take back any of the rally from the FOMC. This constitutes weak structure from right here, from this single print all the way up to settlement. Basically, we have a very weak structures from about 32 to about 52. This is in the S&P. This is considered weak structure. So if we come back and start breaking through the 50, we have a pretty decent chance at seeing 32, seeing this come all the way back into where the market traded a little bit. I mean, yesterday, really we were stuck at 2025 during the RTH session and 25 even right here in the extended hours, which is in line with the prior day's high. So this is where the next piece of support is. Really, it's that 26-27 area, actually 26-27, and then we have 32. I left this in here even though this is a measured move that has already been taken. I left it in here because there's a lot going on in that measured move. This is the 54.75, we'll call it 55 right here. And then we pushed into, in the overnight session, we pushed into the 62 measured move as well. This is a single measured move, and the next big area up is 78. It's looking an awful lot like we're going to cross the 4600 and go to 4700 pretty quick. But again, underneath us, we have the 4650. And then if it doesn't hold the 4650, there's just a really decent opportunity, in my opinion, to re-auction this weak structure, this quick run on the FOMC. So that's how things look. So what are we looking at for today? An open auction out of range. I'm expecting it to take out the 6250, consolidate up here, come back to the open, and then pull back into the 50. The overnight low is 50.75. Pull back into the 50 and fight it. And I'm going to draw a line here and put a question mark up here, because the reality is I have no clue where the auction might end up. All I know is if it does break through the 50, then again, we have a potential bounce at 32, okay? Or it may bounce and then come back through and test into 26, bringing us back into value, or into the predominant value a while, from 2 days ago. No idea. So me drawing these lines isn't really going to provide any information. All I can give you is the map, and the map is 62, 70, 78, 62, 55, 32, 26, 27. Those are the key areas that I expect to engage with the market, unless we're trading against some market generated levels. Again, I don't want to give you a map because I think that doing so colors something that has no basis. We're at new all-time highs. The best trade for today, in my opinion, the best trade, the best opportunity for today for day trading purposes is we take out the high early. So let's clean this up. Let's see if I can. Be nice to back these out, back these. Let's see if Control Z will work. Nope. Be nice to back these out to get back to my levels. But again, 78, 62, 55, 32, and then 26, 27. Those are the numbers that are scarred into my brain this morning. But the best trade today is it takes out the 62, goes and discovers what is up there, what is going on up there, gets some selling, gets some lack of interest, comes back in, tests the 50, consolidates, and the trade I would want, again, this doesn't have to happen, and I'm not anticipating it'll happen, is a break through the 50, pull back, and it's unable to get back above the 50. That sets up a short trade right on the leg that after it fails for a move to 32. That's about 17, 18 points. That would be the sweet trade of the day because I expect it to run through this area pretty well if there's a clear downward bias. If it pokes in here and it's just grinding, it may just, come back part way through the single prints and jump back up into balance. But that's what I'd like to see. It doesn't matter what I like to see, but I'm just simply telling you what setup would be ideal for today. I'm not sure if that's useful. I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. Don't forget, tomorrow morning is non-farm payrolls, the second major number for the month, non-farm payrolls for the U.S. at 8:30 Eastern. Take care.